Hey, it's Lewis here and welcome back to the channel. In today's video we're going to be going through Activision Blizzard stock. We'll be using TIKR terminal to go through the financials of the business, and then after this I'll be putting the numbers into my analysis checklist to check if the business is a good enough quality for us to be interested in. Then I'll be putting the numbers into my DCF valuation to determine the fair value of their stock. Let's get straight into it. Who are Activision Blizzard? So Activision Blizzard is an American video game holding company based in California, and it was founded in 2008 through the merger of Activision Inc. and Vivendi Games, and it's now traded on the Nasdaq under the symbol ATVI. So yeah, this company owns Activision, Blizzard, King, so it's a big deal in the video game space basically. So the main brands they own are Call of Duty and World of Warcraft. That's what they're mainly known for, but they do also have other stuff going on as well. And yeah, so the company itself is listed on the Nasdaq, and it's a part of the S&P 500 as well. One thing to note with Activision is that Microsoft recently announced that it is going to acquire Activision Blizzard for $68.7 billion. And if approved, Activision Blizzard would become a division of Microsoft Gaming, and it would make Microsoft the third largest gaming company in the world behind Tencent and Sony. Now let's take a look at the sales per business for Activision Blizzard. So for 2021, we'll start with, so the Activision section makes up 40% of the sales, King makes up 29% of the sales, Blizzard makes up 20% of the sales, and then the rest of it makes up about 12%. So yeah, it's quite split across the different companies within Activision Blizzard. Sales per region, so let's have a look around the world. Where are Activision making their sales? So 49% in the US, so basically half the sales come from the United States. EMEA, I'm going to say that's Europe, abbreviation somehow, 21%. Asia Pacific, 12%, UK 11%, and then the Americas 7%. So mostly America, a bit in Europe, a bit in Asia, but yeah, solid overall. Now let's take a look at the Activision financials using TIKR terminal, and we will start with the income statement. So first figure I always look at is the revenues. Have they been growing over the past 5 or 6 years? Blatant yes, absolutely solid. Change year on year, 2016 was big to the previous, what was 2015? Let's have a quick look. Yeah, so 2016, 2015, absolutely massive jump there. But yeah, from there it's been high single digits growth, a little bit of a drop off in 2019, but overall the revenue growth is there, which is solid. Yeah, what else we got to see here? So gross margins as well have been increasing over time. That's a really good sign of a business. If you can increase the gross margins as well, generally means that profits are going to grow by even more. Generally because your fixed costs generally stay the same, or very similar anyway. But yeah, you can see the profit is gone on massively as well, which is awesome stuff. Next figure on here I like to look at is the shares outstanding. Has this been decreasing? Are they buying back shares, rewarding shareholders? Ever so slightly up. What's that? 30 million shares maybe? It's in the grand scheme of things not a big deal. You can live with that because of the growth of the business, which is solid. Right, next bit, balance sheet. Just some brief figures I'll look at. Long-term debt is the main figure. I like to see cash balance going up over time actually. Just a quick glance at that. So cash balance over time is going up. If a company's cash balance is going up over time, it generally means they're doing well. It's a weird metric, right? But a very simple one as well. If a company's cash balance is going up, just a very simple metric. But yeah, it is going up, which is good. Long-term debt, so it's decreased slightly, which is solid. Current portion, long-term debt, there isn't any, decent. So yeah, long-term debt's gone down a bit, so no complaints there from me. What else do we look at? So that's about it from just a brief look at the balance sheet. The ratios are obviously the best bit for the financials. They tell you more of the story of the business, but you can have a quick glance at this just to get a brief idea if it's any good or not. Cash flow statement then, and cash from operations. So cash from operations minus capex is free cash flow, the most important figure in my view when looking at stocks. So the free cash flow itself hasn't really grown that much, let's be honest. It's either up and down yeah, not really done that much. So it's been a bit steady, is what it is. So yeah, we know we've been paying the debt back, which is cool. Dividends, we've been paying a solid dividend, increasing over time. Lovely stuff. Buying back shares as well. Yeah, pretty decent. But then on to my favourite bits of ratios. This is where I feel like I get a good feeling of the business. I can just have a quick look at the ratios and quickly see if I'm going to like it or not. Return ratio, so return on capital, one of the most important ones. Yeah, high, double digits. Apart from 2017, solid. I like to see 15 or above. So this isn't too bad, really. You could hopefully over time they can keep increasing this, and you would like to see that. And then yeah, gross profit margin. So yeah, this has been going up over time as well, like we saw on the income statement. Winner. Net income as well has been growing. That margin as well, look at that juicy margin, 30%. That is really, really good. And free cash flow margin as well has been a bit all over the place. Something to question maybe. Current ratio, so there's a lot of liquidity. Look at that. I like to see above 1. So when it's near 5, there's a lot of cash on hand basically. Cash conversion cycle. Yeah, the numbers aren't pulling through here, but I like to see below 60, and it's like near 10. Probably because it's a software business. We're generally quite low, which good quality business, absolutely solid. Then debt to capital. Yeah, so I like to see this number below 50%, and it absolutely smashes that. So most of this business is financed by its equity, not debt, so which is awesome. So yeah, but yeah, some solid stuff there from Activision on TIKR Terminal. If you want to use TIKR Terminal, the link is in the description below. Yeah, use that link and yeah, enjoy using TIKR. If you are enjoying today's video, then why don't you book in a one-to-one coaching session with myself? In these sessions, you will learn how to analyse a company using fundamental analysis. As well as this, you will learn how to value a company using a DCF model. Value investing is the art of buying stocks which trade at a significant discount to intrinsic value. Value investors like myself achieve this by looking for companies on cheap valuation metrics, typically lower multiples of their profits, assets, and cash flow as well, for reasons which are not justified over the long term. Billionaire value investors such as Warren Buffett, Charlie Munger, and Joel Greenblatt have all used these timeless concepts to beat the market over the long term. No financial advice will be given on these calls, financial statement analysis and business valuation, education only. I will see you there. Let's have a look at the genuine impact stats for Activision Blizzard, and we will start with the quality metrics. So yeah, it's looking very, very high right now, which is absolutely class. Profitability, financial strength and capital allocation, all medium, strong, sound respectively. Then on value, it's looking expensive on these all metrics. Yeah, that's interesting because I personally think it's looking decent value, but genuine impact thinks otherwise. Then looking at the growth, it's all been high, absolutely solid, no complaints there. And yeah, you've got that little shield there on the quality bit, so it's one of the highest quality stocks on the platform. So yeah, very interesting stuff there from Genuine Impact. Now let's have a look at my analysis checklist for Activision Blizzard. So we'll start with the market cap, so $62 billion market cap, quite a big business to be fair, one of the biggest video game companies in the world. But anyway, let's have a look. So profitable, high returns on capital using low leverage. So the business itself has got decent returns on capital at about 13% 5-year average, but it doesn't quite meet my 15% I like to see, so it's in the red unfortunately. But over time I'd expect this to go up as the business gets bigger, more profitable. Like financial statements have shown, they're getting even more profitable, so yeah, solid. Margins wise, absolutely smash it. I like to see high margin businesses. These are usually the best businesses. The higher the margin, usually the better it is, and that's what I like to own. Free cash flow margin as well. Relates a bit to the net profit margin, but this is even higher, so even better. Current ratio, so how much liquidity do you have in the business in terms of current assets over current liabilities? 5 is very, very good. There's not many businesses that can do this. Cash conversion cycle, I like to see this below 60. How is the cash going from suppliers to inventory and then out the door through sales? And it looks like to me that they absolutely smash it, to be fair. They get the cash through the business very, very quickly. Winner. Total debt to capital, how much of the business is financed by debt? Only 18%. This is very low in the grand scheme of things for a lot of businesses, so this is solid from Activision. a very key metric for me. If this is high, I usually instantly avoid, so this is just solid. Proven ability to grow, so growth of the business, revenue growth, net income growth, retained earnings growth, and free cash flow growth. Solid stuff. It's fair for you to see, it's class. Great capital allocation, so what are management doing with their capital? And yeah, long-term debt repayment, yes, they've been repaying debt. Decreasing share count, this is slightly up. Looks like employee stock options and management stock options, so can let them off of that because, you know, management and employees need to get paid, don't they? So yeah, can let them off of that, it's not too much of a big deal. Dividend growth, been growing dividend, yeah, solid stuff. Good acquisitions, so this is actually negative, so they've had more asset write-downs and goodwill impairment than gain on asset sales. They've probably not sold any assets, let's be honest, so this is likely just little bits of asset write-downs, but no goodwill impairment, which is good. Right, okay, so quality score of 80%, misses out on 3 metrics, overall very good quality business. It's clear, it's here to see. You can see it from TIKR financials, let's be honest, very good business. Buy at a fair price though, that's what's the most important thing. You've got to buy at a fair price. PE ratio 25, price free cash flow ratio 26. Yeah, that they're in the red, because I like to see it below 20. But then the DCF valuation for a 10% return, spitting out a share price of $71 per share. And that's currently, from the current share price of $79 per share, 10% drop to get there. But what's interesting, Microsoft has, you know, like I said earlier, have recently said they're going to acquire Activision for $95 per share. And that's due to complete in, I think, summer 2023 time, so about a year, something like that. So yeah, let's just, for argument's sake, put $95 in there. So if the acquisition goes through for $95 per share, you're looking at a 21% uplift, and let's say there's no SEC regulation, government intervention, whatever, and this goes through, from today's price, if you buy and it closes, you know, on acquisition day at 95, you get a 21% gain. This is quite a cool arbitrage play, and I think Warren Buffett has recently just said he's increased his stake in Activision even more. I think his managers, you know, put about $1 billion into Activision, but he's gone ahead and put even more money into Activision now, because he sees this arbitrage play playing off. So looks very interesting. I'll just go back on that. But yeah, we'll go to my DCF valuation now, and yeah, we'll have a quick look at the numbers. And anyway, the free cash flow estimates have come from marketscreener.com, estimating to the future. Perpetual growth rate of 2.5% until the end of time. Required rate of return of 10%, and we're currently looking at a share price adjusted for net cash of $71 per share. So yeah, this business is probably going to be acquired, but even if it wasn't, it's still a very high quality business. But yeah, no, interesting to see the numbers behind it all. So there we have it, that was my full stock analysis of Activision Blizzard. And if you enjoyed today's video, then please subscribe to the channel. Thank you very much for watching. I will see you next time.
Thank you for watching. As always, it would be amazing if you could like, comment and subscribe to the channel if you enjoyed this video. I will see you in the next one. However, you can check out some of these videos.